If I say breakout trading strategies, most of your minds probably go to pictures like the ones from the Google search behind me, where you have resistance and support lines, you have wedge lines, you have entrances for where you should be entering based on these lines that are drawn on the chart. And I have nothing against that. That's all fine and dandy. But as a system trader, I need a way to objectify the rule set of a breakout so that I can test whether the strategy actually works or not, and then optimize it to be as profitable as possible. So the strategy I'm going to give you today does just that. Not only where to enter your trades, but also where to exit your trades. Another reason why I don't love images like this is they talk about entrances and that's all great, but you also need an exit strategy that continues to be profitable over time. Today's video is going to give you a strategy that covers both of those things. Make sure you hit the like button if you enjoy this video. Make sure you're subscribed so you don't miss future strategy videos in the future. And let's jump into our rule set first. So we're going to go over, once again, objectively, what the entrance and exit rules are of this strategy. Now, as it being a system trade, you are going to need a couple of indicators because in order to objectify a rule set, we use indicators to do that, right? In this strategy, all you're going to need is the RSI, which is a kind of a velocity indicator showing how fast a stock is moving up or down. And you're going to need ATR, average true range, shows you the range of candles over a specific subset of length. So those are the two indicators you will need for this strategy. And let's go ahead and jump into the rules. First rule, simple enough. Only trade between 7 a.m. and 8 p.m. Eastern time, market time. That's when my brokerage is open. That's the first rule. Second rule, the close of the current bar you're looking at, and we're going to be doing this on a 1 minute chart. So the close of the 1 minute bar that you're looking at must be over yesterday's close. Vis-a-vis, it has to be green on the day. That's what that means. Now is when we start getting into the fun stuff. So the volume on the candle you want to buy, once again, the 1 minute candle you're looking at, must be greater than the value of what $3,000 can buy you in number of shares times 100. That's what 3,000 divided by close means. I use $3,000 positions when I trade this strategy. You can size this to your own, or you can use this parameter just with your own sizing. I'm going to leave that up to you, but I want to make sure that if it's a $1 stock, I'm going to buy 3,000 shares. It has to be trading at least 300,000 shares of volume on that candle. I want the candle to have enough liquidity that I'm not going to run into issues there when I go to buy. And then the strategy, the reason. This is a reason I've actually never heard of before, and I hope it's something that you all can maybe implement into your toolbox for the future. It's something I have found great success with so far, but the RSI of the current bar, once again, the value of the RSI on the current 1 minute candle minus the RSI of the previous candle, that's what the parentheses or the bracket, should I say, 1 represents. The RSI from a candle previous is greater than 10. Essentially, the RSI value on this current 1 minute candle is at least 10 RSI values greater than the previous candle. It's at least 10 higher than the previous candle. Once again, RSI is a momentum indicator. It's a velocity indicator. It shows you how fast a stock is moving. I don't really care about what the RSI value is. Who cares? But I want to be buying stocks that are making big moves. So the RSI is making at least a 10-point jump up. That means you just got a big green candle. That means you just got a big breakout candle on heavy volume. And this is how, as a system trader, we use our indicators to create objectively defined rules. We don't just say, you see a big green candle with heavy volume, go buy it. No, now you have real. If the RSI is 10 greater and the volume is at least this, then it is a buy. When you have objective rule sets like this, you know, okay, that is a buy. There's no more thinking. It is a buy. It's the beauty of system trading. That's the rules for the entrance. Now, as I said, in a system, really in any trade plan, you also need to have a profitable exit. The entrance is great and grand, but then where you exit is very important. What you get on your winners versus what you lose on your losers is very, very important. So let's go over the exit rules. The take profit exit rule is the high minus the entry price, so whatever you paid for the shares of your stock, have to be greater than the ATR of a bar ago times 2. Essentially, take the average true range of the previous bar, and we take it from the previous bar because the average true range on the current bar is always fluctuating with each tick. So you can't really use a fluctuating value. So we take it from the previous bar. If your price is greater than, so add the average true range of last bar onto your price, multiply that, or sorry, the average true range from the last bar multiplied by 2 onto your current price. If it's greater than that, you exit. If that doesn't make sense, I'm going to get into trade examples here in a second. It'll make a lot more sense. And then also, if the current bar closes under the low of previous bar, that is our stop loss for this strategy. Really, any candle under candle, if it closes below the low of previous bar, just go ahead and get out. And that's not always a stop loss, by the way. That can still be in profit if it doesn't quite hit this profit target but starts to roll. This is how we protect our downside risk as well there, lock in the profits as well. So let's go ahead now and jump into a couple of trade examples. I'm going to be looking at GNS here. This, of course, is a very hot stock, but this is what you want to be looking for. You're going to be looking for these penny stocks or these low float stocks. That's another thing. I only trade this strategy on stocks that trade under 30 million share float and have a relatively cheap stocks as well, because they're the ones that are going to be getting the volatile move. So anyway, let's look at the entrance here. As you can see, the RSI on this candle, well, you guys probably can't see. I know these values are really small. You just have to take my word for it. The RSI value on this candle was 53. The RSI value on this candle is 72. That is a 19-point jump in the RSI value over a one candle time frame. The volume we want to buy, so the stock is trading at 115. That means we're going to buy 2,600 shares of it according to our volume rule of our buying power, should I say, $3,000 position. So the volume is there, the RSI move is there, so this is a buy. This is using our coded strategies in Thinkorswim to simulate this strategy. Once again, once you have a system that's objectively defined, you can really test it like this. And then it ramps up, and as you can start to see here, so the ATR on this candle is 4 cents. So you can see I plotted out here. This is the ATR times 2. So the ATR on the previous candle is 4 cents. We're looking for 8 cents of profit to sell this thing. You will also see here at the end, it kind of ticks up. That's because the ATR on this candle, once again, the previous candle goes up to 4.1. So we're now looking for 8.2 cents up or whatever, a little tick up there at the end. But it does end up hitting profit target here. Get out. Once again, RSI in this bar is 62. RSI in this bar is 72. Actually, an exactly 10-point jump. Very nice. The volume is trading at 1 million. We want to buy 2,300 shares. That is definitely 100x what we want to buy. It has to be trading at least 230,000 shares. Over 1 million definitely meets that rule. This is objectively a buy. Set the sell condition to the ATR of the previous bar times 2, which here is 4 cents. So you're looking for 8 cents of profit. Bada bing, bada boom, you get there. Those are some winning examples. Let's go ahead and zoom out to some losing examples as well, because of course it's not a 100% win rate strategy, but I'm not going to repeat it. A 10 plus point RSI move on over 100x the amount of shares you want to buy volume. You enter. This time, it does not get to your profit target. First candle you get that closes below the low of a previous candle, you just go ahead and stop out there, sell it. Same thing happens here, and I want to show you all an example. Here's an example in after hours. You can see another win, and actually a win even though it gets stopped, right? It doesn't quite get to the profit target. Dang, frustrating. So it rolls over, closes candle under candle, so you sell. It's an example where the stop is still a win. So that's the breakout strategy with a couple of examples. Hopefully you find this helpful. Remember, trade strategies are not always profitable. There will be market conditions in which trade strategies work. There will be market conditions in which trade strategies don't. I'm giving it now up to you to do further testing on this. Please do not just take this strategy and start blindly testing it. You need to do your own back testing on this, but these videos exist to help put ideas into your head. Hopefully this idea of volume greater than share size, this RSI change as your entrance, the ATR, using ATR as an exit. Hopefully these ideas are things that you all can start to implement into some of your own trade strategies. Be sure to hit like. It really, really does help if you made it this far. I appreciate you. Be sure you subscribe to the channel down below. With that being said, I'm going to go ahead and sign out of this video. I will catch you all in the next one.